Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 36th COT report in 2014. As usual, we're going to start off with the changes in commercials position. So here we go. Soybean meal on top of our list with a 27% change in commercials positions, 25 in large speculators. I'm showing you over here. These changes are larger than average. We do see similar changes in the past. We have bullish, bearish, bullish COT change signals in the past couple of reports right now, and of course we're not that surprised since price movements are pretty dynamic as well. So this is a bullish change signal at the moment, and just showing you the 5-year chart, which I showed you last review, or maybe the one before, that we don't really have a extreme situation at the moment. So it's really the change signal that may affect prices at the moment. And of course, if the change signal is effective, we're expecting a rise in prices. S&P 500, our next market, we have a bearish change signal, 19% change signal. It's interesting to see both commercials and large speculators below the zero line. Of course, it's not that unusual. If you look at the 1 year chart, we had this case a few times this year. We've got a pretty large change in small speculators, but if you look at the chart, it's really not that unusual. It happens quite often. It is of course, a bearish change signal, maybe pushing prices a bit lower in the next few days or weeks, maybe. Lean hogs, our next market, 16% change over there in commercials positions. It is a larger than average change, but nothing too unusual if you look at the chart. Let's have a look at the 5 years chart and see how extreme lean hogs is at the moment. You can see that we're a bit closer to the bearish side of this extreme. We're not absolutely bearish, or the extreme is not that large. It could get even greater if you look at the chart. The last major bearish extreme happened over here, and as you can see, it was an effective signal. And then the earlier one was over here, again, not a bad signal. So we should expect prices, the extreme to widen even more to reach that bearish level, or of course it can widen towards the opposite level, and we may see some bullish extremes coming in the near future. Moving on to large speculator COT Extreme. Here we go. We've got Palladium and rough rice on top of our list with all-time extremes in large speculators positions. In Palladium, we've also got all-time extreme in commercials. So these are huge extremes. Let's open the 5 years chart right away to see this extreme on a wider time frame. And right away you can see that we had this extreme for a few reports now, and as you can see, price has declined pretty rapidly. So this may signal us something about the end of the rally, and if so, this decline may easily continue for many weeks to come, since the extreme is so large. So of course, nobody can tell exactly if we've reached the top. If prices would continue rising, I would be expecting the extreme to widen even more. But one thing's for sure, there's no question about the fact that stress levels are huge in Palladium, both in large speculators positions and commercials as well. And of course, small speculators are not that weak about their expectations. They're very, very optimistic about the market still, so that's also a pretty bearish signal we have. Rough rice, moving on, all-time extreme and a huge 1,144 report extreme in commercials. Here we go. You can see the extreme on this wider time frame. It is an unquestionably large bullish COT extreme signal. And if you look at the chart, we've reached these levels quite often in the last 3 years, and prices could not really gain momentum and rise that much. But anyhow, these extreme signals were capable of identifying bottoms throughout the way. So in this case, we are expecting the bottom to develop soon, or at least prices should not go any more lower or much lower than the levels they're at right now. And then last but not least, we've got soybeans with a 414 report extreme in large speculators, but all-time extremes in large commercials and small speculators. So pretty large extremes we've got now. You can see the extreme over here, the same situation, a bullish extreme that should end this decline we have right now in the market, and we would be expecting prices to rise soon. Maybe not in the next few days. It's difficult to tell, but it's definitely there. And if you look at the historical charts and maybe even go back further, then you'd see how well soybean markets are changing, and how well they take these COT signals. That's going to be all for this week. If you'd like to have a look at other COT charts, you can do so at our COT charts page. If you'd like to have a more in-depth and detailed COT analysis, then it's our COT analysis page that we're at right now. This is the page, and this would help you go and do an even deeper analysis about the markets you're trading. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.